As always, the motto is simple. These updates are the noise. The BTC signal stacker is the signal we use to take advantage of that noise. Now let's get into it. Last week, I told you the key level was 109K. We said if Bitcoin could hold that line, the mid-cycle structure would stay intact. And that's exactly what happened. Bitcoin respected that level, bounced, and today we're trading back around 111K. That's not luck. That's how cycles breathe. So where are we right now? On the daily chart, Bitcoin is holding above the 125-day moving average, but the 50-day is still acting as a lid. The breakout zone is 114.5K to 116K, clear that level, and we open a runway back to the summer highs around 121,000 to 124,000. If we get rejected here, the first supports are 108K and 105K, lose those, and the 200-day near 101K comes back into play. On the weekly chart, nothing is broken. Higher highs, higher lows, classic mid-cycle digestion. Now, the fundamentals this week. We've got a catalyst cluster on deck. CPI drops September 11th. A cool number boosts rate cut odds. Risk assets rally. Hello, Bitcoin, a hot print. Expect to chop sideways. Then the FOMC on September 16th and 17th. Markets are leaning toward a 25 basis point cut. But it's not just the cut. It's the tone. Yields front-run policy, and Bitcoin has been moving in lockstep with those shifts. But here's where it gets interesting. While the chart looks sideways, the demand story under the hood is surging. Spot Bitcoin ETFs just saw over 633 million in inflows across 2 days, one of the strongest stretches since early August. BlackRock's IBIT alone pulled in almost $290 million in a single day, reinforcing its spot as the fastest growing ETF ever. Altogether, U.S. spot ETFs now manage more than $145 billion in Bitcoin. And corporate treasuries, they just crossed the 1 million BTC mark. That's a big deal. Metaplanet outlined a plan to scoop up 210,000 BTC by 2027. Even U.S. Bancorp has restarted Bitcoin custody services for institutions. Meanwhile, the mining sector is scaling up. Riot and CleanSpark both reported year-over-year growth in production and hash rates. And Griffin Digital just got approval to merge with Trump's American Bitcoin, soon to trade on NASDAQ under the ticker ABTC. Non-Quad, follow the money train and get on board. That's institutions, corporations, and miners all expanding at once. So what's the bottom line? Yes, this may sound like last week's update, and that's the point. We called the 109K hold ahead of time, and Bitcoin is moving exactly as expected. The difference now is the demand picture is heating up in ETF inflows, corporate buys, miners scaling. This isn't dead money. This is coiled energy. So the structure hasn't changed. We're still coiling between 105K and 116K. Breakout above, and we're looking at fresh all-time highs. Fail. And we grind the range until macro opens the door. Patience here isn't stagnation. It's fuel building pressure. And when that breakout comes, the signal stacker won't hesitate. Click subscribe and follow me for weekly updates.